Wall Street investors are bracing this morning for another big drop. The Dow Jones Industrials plummeted nearly 531 points Friday. The Dow's fallen more than 10% from its peak in May. Global markets are dropping because of bad economic news from China. It could signal the end of one of the longest bull markets in U.S. stock market history. CBS News business analyst Jill Schlesinger is with us. Jill, good morning.
Good morning.
How bad is this going to get?
I don't know. I got to pull out my crystal ball and look. I mean, nobody knows, right? So a correction is a normal part of markets. And usually we get them every year or so. And it's been almost 4 years since the last correction. So we've been long overdue for one. I think what happens in these moments is everybody starts to get really anxious. And they say, oh, my gosh, we're down 10%. Now it's going to be 20 or 30 or 40. And the reality is we don't know where it's going to end. Markets usually do overshoot. But if you're a long-term investor, you should be psyched. You should be saying, hey, I can buy shares cheaper. I'm putting money in my 401k, my IRA. I'm saving for my kids' education. Things are on sale right now.
So that's the upside to that, is that you're buying at some low prices for your 401k.
Absolutely. Of course, the downside is that if you are no longer putting money into the stock market or you're retired and you're living off your portfolio, this is little bit of a white knuckle time. For those folks, I'm very hopeful that the last 7 or 8 years has cured us all of putting 100% of our money in stocks. You probably have a diversified portfolio. You're going to be very happy to have some cash and your U.S. bonds in that portfolio. And hopefully that will help you weather this storm.
And that's what I was going to ask you. I mean, is it the time to build yourself a nice little insurance policy? If you're not pulling money out, do you reallocate to more fixed income? What do you do?
Well, I think the problem is that, yes, you should have reallocated back in May, but we can't go back and do that. But one of the reasons that we talk about diversified portfolios and something called auto rebalancing, meaning that you always want to keep your balance pretty much within 5% of your target, is that you don't have to be reactionary. Look, I know what's happening right now for everybody. There's a devil and an angel on your shoulder, right?
Yes, exactly.
And the angel's saying, hang out. Jill says everything's going to be okay. And the devil's saying, get me out of this. It's too painful. Try to put that devil at bay.
So one of the big decisions that's coming up for Janet Yellen, the chairman of the Federal Reserve, is whether to raise interest rates, and the board as well. Larry Summers, I noticed in the Financial Times today, says, the former U.S. Treasury Secretary says they should delay that decision. Do you think that happens?
I think it's possible. I mean, look, there are clearly destabilizing forces in the economy right now. We know that China's under pressure. I think what the Fed's got to look for is whether there is real impact on the U.S. economy. Just to draw a distinction, 4 years ago, when we had the last correction, things were a lot worse off here in the U.S. Since then, we've seen a lot of jobs created, unemployment rate is down, housing market has firmed, and individuals are in better shape. They've paid down credit, they've saved up some money. So I think that the Fed may be able to actually get away with an interest rate increase. Just remember, if they don't increase interest rates and something bad does happen in the economy, they have nowhere to go. They're at 0% already.
They're out of ammunition.
All right. Jill Schlesinger, always great information. Thank you so much.